Hello and welcome to Switzer TV. I'm Peter Switzer, and today I'm talking to Wayne Peters of Peter's MacGregor, and we're going to talk about investing overseas. Welcome to the program, Wayne.
Nice to be with you, Peter.
Okay. Now, I know a lot of people are really interested in investing overseas, but they often feel a little bit insecure about it. Tell us what you do in trying to identify great companies overseas.
Well, our approach at its core is very basic. We're looking to build a portfolio of companies that we plan to own for the long term. And by long term, we're meaning 10 years or longer. So the businesses that we look for need to be able to sustain that type of term. So we need businesses with very strong balance sheets that will allow them to compete and be competitive for that 10-year time horizon. The beauty about that time horizon is it allows us to not get distracted by all the short-term noise. And as you would know, the market is full of that short-term noise, what the business is earning in the coming quarter, the expectations for the coming 6 months. Those aspects just don't factor into our thinking. We're looking for businesses that are going to compete strongly over the 10-year time horizon that we're looking to invest. And the portfolio is simply a compilation of those businesses that we've selected on a stock-by-stock basis. You know, we currently have 21 positions in the portfolio. So the portfolio at the moment, even though the major indexes are at all-time highs, we believe is very prospective, and probably the most prospective that we've had in a long, long time.
Okay, so by saying prospective, you mean they're probably more elevated than they should be?
The prices of the indexes are certainly very high. You know, the Dow has recently reached the 20,000. That's an all-time high. So the prospect returns from these indexes, I believe, are very low, and investors need to be very cautious about buying the indexes. Our portfolio, on the other hand, made up of businesses that we've acquired when there's been some form of bad news around the business, and the prices have been reflective of that bad news. Our judgment calls come in deciding whether the bad news is only a short-term aberration and whether the core business remains intact and will produce investors over the long period very significant returns.
So like Buffett might say, when everybody is fearful, you get a little bit greedy and start buying good quality companies.
Well, that's the mantra that we come to work every morning with. Easier said than done, of course. But our experience is whenever you have a rosy consensus in the marketplace, when everyone's optimistic about a business, the price generally reflects that.
Okay, give us an example of a recent winner that you've selected, and tell us what was the criteria for doing
Well, certainly our recent performance has been very strong. Sirius XM is a very good example of that. So this is a US-based company. It's a radio service by satellite, advertising free, so it's a subscription model. So people pay $12 to $14 a month to have advertised free channels and radio, 165 channels plus exclusive content. I'm not sure if you've heard of Howard Stern. If you want to listen to Howard Stern, he's like a shock jock. The only way to
a real shock jock.
Yeah, exactly. The only way to listen to him is as a subscriber of Sirius XM. And the beauty about this business is it is now a monopoly. So prior to the 2007 financial crisis, the industry comprised of two businesses, Sirius and XM, and they were both mediocre businesses. They'd taken on a lot of debt and were really only producing middling returns. The government, post the GFC, then allowed the companies to combine, and all of a sudden you had a monopoly, and the economics changed significantly. So we like the business a lot. It has a very strong balance sheet, plus it's controlled by one of the best capital allocators that we've ever come across, in the name of John Malone. You may have heard of him, Peter.
He's even locked horns with Rupert Murdoch and lived to tell the story.
Oh, absolutely. I mean, he was the original cable cowboy in developing the cable industry in the US. He's very focused on making appropriate capital allocations, managing the tax base, and then also bringing best CEOs to the businesses that he controls. So SiriusXM is listed in its own right, but we've invested in this by investing in his company, Liberty Sirius, which owns 64% of Sirius.
Okay. But you don't just do America. In a sense, you go around the world trying to find companies that fit the bill, quality companies that look like an attractive price. Can you give us some examples from overseas?
Well, some of our most recent additions to the portfolio have been based in Europe. ING is a Dutch-based bank that has a worldwide franchise. I've noted recently here in Australia that you can use any ATM in Australia fee-free to access your ING
And they get
account.
some great ads as well.
Yeah, well, I love the ads.
That's fantastic.
But that business is seriously undervalued in our view because of the overhang and concern in Europe. And yet here you have a worldwide bank that is really will just play right through any concerns that occur in Europe. So that's a good example. Another example is we're invested in two of the UK banks, Lloyds and RBS. And again, these banks are trading at prices that we believe people feel that reflect how they were back pre-2007. But now they are the sole two consumer bank franchises. All the investment banking assets have been sold off, and they are just the core everyday run-of-the-mill vanilla banks. And
Did the Brexit give you a bit of a buying opportunity as well?
It certainly did, especially with RBS. It was hit the hardest. It was clearly a surprise to a lot of people. But we don't invest on political situations. If we're looking for businesses to own for 10 years or longer, you're going to have a multitude of political changes over that period. And the Brexit, clearly the outcome is still uncertain, but what we do know is England will be just fine, and Britain on a greater scale will be just fine. And banking is a necessity, and these businesses are running very, very well. And I think we'll do very well.
I know you don't need to be absolutely right about the macro setting, but ultimately, I'd just like to know, are you, despite the fact I know you're a bit concerned about the enormous rally since Donald Trump became president, do you have a feeling that the overall global economic setting is going to be good to be buying shares over the next 3 to 4 years?
Well, we're very cognizant of the macro. We're in an environment the likes of which we've never seen before, Peter. You have a quarter of the world's GDP in negative interest rates.
Yeah.
I mean, no one alive has ever seen that situation. So in an environment where normally when you put your money in the bank pays you. You've got an environment in a quarter of the world's economy where you have to pay the bank to take your money. So that is a very strange situation. And if you think the macro is not a challenging environment, I think you just don't understand the situation. But what we're looking for in our portfolio construction are businesses that will compete well, irrespective of the economic tides. If you're looking to be a long-term owner, you want businesses that can take advantages of any downturn. And every business we own currently has proven that it's done just that. So when the competition or economic landscape gets tougher, they tend to grow their business value because a lot of their competitors fall by the wayside. The ones that aren't capitalised as strongly don't have a stronger competitive advantage. So we relish these type of volatile markets. And I must say, on the surface, the volatility has been much lower than you would expect. It's an interesting environment, but we're only looking for a couple of dozen businesses to own. So
if someone wants to back you and what you're doing, how do they do it?
It's very easy. We have a pool trust called the Peter MacGregor Global Fund. It's priced daily. People can come in and come out. What is a very advisable approach, I think, as a long-term investor and for the investors, superannuation funds, private investors that are looking to build their wealth, is to come in on a regular basis so they average in over time. And that just gets rid of all the concern about market timing, which we don't even think about. And we have a regular saving plan which allows on a monthly basis a regular amount to come into the fund.
That's a good idea. Well, that was Wayne Peters of Peters MacGregor. I'm Peter Switzer. Thanks for joining us.